Welcome to the Money Answer Show with host Jordan Goodman. Whether you are starting out, deep into your retirement, or somewhere in between, the Money Answer Show has the know-how to help you. Now here's your host, Jordan Goodman.
Welcome to the Money Answer Show. This is Jordan Goodman, your host. My guest for the first half hour is Paul Birkett. He is the CEO of Automation Finance, which is a real estate company that specializes in non-performing debt. Welcome to the Money Answer Show, Paul.
Thanks, Jordan. Great to be here.
Just give us your history briefly and how you got into the business of non-performing debt.
Well, it's funny. I don't think anyone ever says when they're a kid that they want to be in the finance industry or the non-performing debt industry. But I guess people just find their way in there. And I found my way in by complete accident. I came to the U.S. in a corporate job way back in 2010. And one of my first trips was to Florida. And I found a magazine in one of the hotels in Florida advertising a realtor's inventory. And I couldn't believe that you could buy a 3-bedroom, 2-bathroom home in Cape Coral, in just across the bay from Fort Myers in Florida for $80,000. I'm from Ireland originally, and there is no home in Ireland that you could buy for $80,000, let alone one in a beautiful town like that. So I went down and took a look at this home and ended up buying it because it could rent out for $1,600 or $1,700 a month, which was a terrific return, again, compared to what we're used to in Europe. And so that led from one home to another home, and eventually I ended up with about 30 houses all over Florida and some in Phoenix, where I think you're in that area. And one day I got a call from the bank where I was buying a short sale. That's a sale where they're selling the home for less than is owed to the bank. And the bank takes a loss on that. And the person I was dealing with said, listen, I can't sell you that. I'm very sorry because we've sold the loan. And I thought, you sold the loan? You sold it to a different bank? And they said, no, we sold it to some guy. He invests in non-performing loans. And so that blew my mind because to do that outside of the U.S. is unheard of. And so it got me thinking. And so I started researching that business and found that, wow, this is terrific. You have all the benefits of owning a lot of real estate, but you don't actually have to own it. So when the toilet breaks, it's not your problem. It's the person who owns the home. And unlike with the renter doesn't care about your house. But if you're the mortgage holder, the mortgagee, the person who's living in the home and who owns the home, well, they really do care about it and they make sure that they keep it in good shape. So that's how I got into the business, by complete accident.
Very good. So tell us exactly what the process is. How do you find and purchase non-performing mortgage debt? Is this only residential mortgages or this is also commercial mortgages?
Well, it's funny you ask because up until now it has been only residential. But as we've made a bit of a name for ourselves in the last 5 or 6 years, I'm now getting people calling me for hotel loans and for auto loans. And in fact, we're buying our first pool of auto paper right now. So that's loans where the borrower has stopped paying for their car, and we've got to go find the borrower and get them to agree a payment plan with us so that they can start paying again. But to answer your direct question of where do you find this stuff, like everything in life, what you know is important, but who you know is important also. And so I spend a lot of my time going to conferences, speaking at events. I do a weekly LinkedIn 10-minute review of the economy and everything that's going on with the real estate market and the mortgage market. And a lot of people from that, I get 2,000 or 3,000 views per week. People send me emails or people reach out to me on LinkedIn, and banks may be selling 1 loan or 10 loans or 30 loans, and they're happy to work with us because they know we treat the borrowers well. So it comes from all sorts of different routes.
So by the nature of it, it's non-performing, meaning the borrower is not making their payments. Most people would think that's about the worst thing you could buy because you're not getting any income from it. What do you do once you have purchased a non-performing residential mortgage?
Well, it's funny. I spent 20 years in corporate America. I had a good, safe, pensionable, secure job. And when I called my dad to say, I'm giving it up to start a business, to buy mortgages on houses where the borrowers don't pay, he thought I'd lost my grip on reality. But you're absolutely right. That is what we're doing. And so the first phase of it is well, why would you buy anything like that? Well, the reason you would buy it, if I said to you you could buy houses for 60 cents on the dollar, which were available to you, and there was nothing wrong with the house, it was a perfectly okay house, but it was 40% off. You know, if you're in the real estate business, you'd be interested in buying that. The quirk that comes with the non-performing loan is that there's a borrower in the home, but they're not paying. And the reason they're not paying is because they've lost their job or they've fallen sick or some life event has occurred and they don't have the money. And unfortunately, the last thing that gets paid is the mortgage, because if you don't pay the electric bill, you know what happens. And if you don't pay the car payment, they come and take your car in the night. So if you don't pay your mortgage, nothing too much happens for 6 months, 9 months, or a year. And so eventually something's going to happen, but you've got 6 months where you can try and figure it out. And our job is to get in touch with the borrower and figure out why it is they stopped paying. And what we can usually do is restructure the loan, restructure the payments, either add the missed payments onto the end or reduce their interest rate or forgive the payments completely. And that then allows them to start making payments again.
Are the borrowers easy to connect to, or do they avoid your calls? They think you're going to scam them somehow?
Usually they think we're going to scam them somehow, because when we buy a loan, the first thing we need to do is call the borrower and say, hey, Mr. Borrower or Mrs. Borrower, we're here to help. I want to get you back on track. Well, no one believes that. Everyone has read in the newspapers or seen the movies on TV where these big bad guys come, foreclose, kick you out of your house and sell the house. But we have no interest in doing that. We actually make more money by keeping the borrower in the home, because the cost of suing the borrower, foreclosing, evicting, renovating the house, and then selling it is pretty substantial. You actually make more money if you can get the borrower to make some payment much more quickly than taking their home and selling it. So it's actually a win-win.
So you get over that skepticism, and then you have a conversation. I mean, what if they literally have lost their jobs and they just have no income or minimal income even to survive? How can you restructure a debt when they have minimal income?
Yeah, that's often what has happened. So what will have happened is let's say they've fallen sick and they've been off work for 6 or 8 months. So they've missed 6 or 8 mortgage payments, which might be $2,000 each. Most people, when they've been off work for 6 months and are now $12,000, $14,000, $20,000 behind on their mortgage, they don't have $20,000 to catch up. So if they can't catch up, then how are they going to get back on track? And so what we do is we just forgive all those payments. We say to them, you know what, forget about it. Just wipe them away and just start making your payments again. Because over a 30-year loan, it's not that big of a deal to give up 6 months or 9 months of payments. And typically what will happen is the borrower will have found another job. It's not that they're unemployed for the rest of their life. It's just that they fell behind and couldn't catch up. So we'll either forgive the payments completely or we'll warehouse them. In other words, put them on the end of the loan, make them non-interest bearing, and just leave them sit there. And in 30 years, when they sell the house or when the loan is paid off, they can just make a lump sum payment. And in some cases, we'll forgive it if they make on-time payments for long enough.
So you're doing these on a mass basis. You have many, many of these loans, and then you structure them into a security that is only for accredited investors, those with $1 million in assets or more, or $200,000 or $300,000 in income. Is that correct?
Well, almost. What we do is we actually are running a crowd fund. So under Regulation A of the 1940 Code, you can work directly with non-accredited borrowers. So we have a fund right now, pays 8% return, or target, I should say, because the SEC have trained me well. You can't promise anything, but we make a target return of 8%. We make distributions every month, and we raise money directly from the public, and then use that money to buy loans. We mix it with our own money, which we also invest in that fund, buy the loans, and use that capital to buy the loans. As you can imagine, buying mortgages when the average home in the U.S. is about $200,000, you're using a lot of money every month buying these loans. So we're constantly raising money and buying new pools. And with everything that's going on in the economy right now, it's perfect timing to be talking about this, because there's going to be a big wave of non-performing loans coming in the next 3 or 6 months. And
this is only for accredited investors who can buy into this, is that correct?
No, both accredited and non-accredited. We have lots of accredited investors. We've also got institutional investors. But now anyone with $250 to invest can actually be part of the program.
Really? I see. Very good. And so they're going to be getting an annual 8%. And then does the fund mature at some point and they get their principal back? How long is it before that happens?
Right. So it's got a couple of interesting features. We pay a target of 8% and we make distributions every month. So people can get a check every month. A lot of retirement folks and things that want monthly income, it's good for that. It's a 5-year fund. We're a year into it, so there's 4 years left to go. But we offer best efforts liquidity. And so even in the last few weeks, some investors have said, hey, I know I signed up for 5 years, but can I get my cash back? And so what we do is we'll repurchase the investment units with our own funds from those investors, so long as we have the cash to do so. So every month you can imagine there's people coming and investing in the fund. Every month we're settling loans, we're selling loans, borrowers are making payments. We can use those funds to redeem the units of other investors who wish to leave early. So we've been doing that. Only 3 or 4 people have done that, but it's an interesting option if people think that they may need the cash back before the remaining 4 years has elapsed.
Great. All right, we're going to take a break. My guest this hour is Paul Birkett. He is the CEO of Automation Finance. You can find out more about what he's talking about, buying distressed debt for investors at automationfinance.com. We'll be back after this.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this hour is Paul Birkett. He is the CEO of Automation Finance. They do investing in distressed debt and non-performing debt, mortgages particularly. You can find out more at his website, automationfinance.com. Welcome back to the show, Paul.
Thanks, Jordan.
So let's talk about the current situation. We've got over 40 million unemployed. A lot of things have turned down. What are you expecting to come in the next few years as far as non-performing debt?
Well, I think that it will be a lot like what we saw in 2008, 9, and 10, which was in 2008 there was a Great Recession. I think we're in another Great Recession, which could become a depression. And while the stock market and the bond market has sprung back in expectation of a V-shaped recovery, I don't think Main Street is going to swing back in a V-shaped recovery. I think it's going to be a long U-shaped recovery, which means that a lot of people are going to fall behind on their mortgages. We're already seeing it on hotel loans, on construction loans, on other bigger ticket capital items where the disruption to the economy means that there isn't revenue. And when there isn't revenue, there's no way to repay debt. And it will be inevitable that a lot of that debt will be defaulted upon and will be liquidated by selling it to funds like ours. And so I think that the next 3 or 4 years will be very, very busy in the distressed debt business.
So there'll be a lot to buy, but if people are remaining unemployed or their income is so minimal they can't make any payments, how is that going to work out for you?
Well, I think it'll be like everything on a case-by-case basis. A lot of people get into trouble because they've been unemployed maybe for 6, 9, or 12 months and have missed payments that they can't catch up. When they're dealing with the small funds like ours, we're able to restructure those payments quite easily. That's something that the large banks can't do, because if your bank gives you a break on your loan, you're going to tell everyone at the church or at the gym or wherever you're hanging out with your buddies, hey, you don't need to pay XYZ Bank. And so they get a contagion through their whole book where no one pays them. Most people, though, over time do find a job. Maybe it's not quite as good as the job they had before, or they need to work longer hours, but they have some income. And what we're specializing in is restructuring their loan so that we can reduce the monthly payment to something that they can afford. In some cases, the borrowers can't find any job at all. And what we'll do is we will partner with them to sell the home and move them into something smaller that they can afford and give them some money to help them with their expenses. But in the vast majority of cases, the borrowers can go on unemployment, or they can rent out the home and move into something smaller, or come up with some other innovative solution that generates some cash flow so they get to keep the asset and move on with their lives.
So if they're in that circumstance and they have to move to another house, you renovate the house and resell it, or do you rent it out, or what do you do in a case like that?
What we do is we pay the homeowner to renovate it, because it's a lot better and a lot cheaper if they can do it than if we do it. So in most cases, the homeowner is more than happy to get paid to help tidy up the house a little bit for rental. And in most of those cases, the homeowner wants to take some cash and move on. So it's better to even renovate the home a little bit and just sell it, and then they can take some of the cash from the sale and put a down payment on a new home, or move into something that's much more modest, where they can maybe even rent somewhere that's much less expensive.
So there's sometimes you actually do foreclose if they're making no payments at all and there doesn't seem like any prospect of getting payments?
In some cases, there's borrowers who have been on the brink of bankruptcy for 5 or 6 years. They haven't been paying their utilities. They haven't paid their taxes. They have a lot of unsecured debt. And it's inevitable that something was going to happen, and that borrower is going to lose all of their assets. So what we'll do in that case is help them. Sometimes they'll even be in bankruptcy. And what we'll do is help them sell the home. And the only way to clear up title, because there's so many debts, IRS liens, all sorts of other liens on the property, is unfortunately to put that home through the foreclosure process. 99 times out of 100, the borrower wants to keep the home, and we'll work with them to do so. But some cases, the borrower just will not work with us, and we've no other choice than legal recovery of the debt.
What is the security to investors who are putting their money in to non-performing loans?
Yeah, so the loans are all owned in an investment vehicle, and the investors own that investment vehicle. So the assets are in a special purpose vehicle that buys these assets. That vehicle is regulated by the SEC under our crowd funding under Regulation A. So they have a security interest in an entity, and the entity owns the assets.
Very good. So this is designed for investors who want current income, because or should they expect some capital gains after the 5-year holding is up?
No, there'll be no capital gains. What they're getting is a target return of 8% a year. So it's good for people who are looking for exposure to alternative assets, and it's good for people who have spare cash that's sitting in a bank account or in a retirement account earning 0 or 1% or something. They can put it in here and get a target of 8%. And if they need to get the cash out earlier, they can ask us to redeem, and we provide best efforts liquidity. So we will repurchase their units if we have the cash to do so.
If you're getting monthly cash distributions, can you reinvest them back into the fund?
Yeah, you just need to check a box during the sign-up process. Almost everyone does that, because they're then getting a target of 8% return on their capital, but also 8% on their interest. And as you said many times on the show, the wonder of compound interest. Well, compound interest on compound interest is also another wonder. And so they can make an extra little coupon on the capital that they invest.
The last fund you had returned an average of 21.5%. So I know there's no guarantees about the future, but how did you do so much better than 8% on the previous funds?
Well, when we were doing those funds, it was in 2011, 12, and 13, and prices were a lot cheaper then. So you could buy these loans for much less expensive prices. Since then, a couple of things have happened. One, the price of loans has gone up. Now, it might go back down again, but it has gone up in the intervening period. And also, the cost of running a fund like this has also gone up. There's a lot more regulation, a lot more filings required. And unfortunately, that means we have to hire more and more people. And so that reduces the costs, that increases the costs and reduces the returns. Our most recent fund produced 17%. And so if you think about it, really what we're suggesting is that we would split that with the investor. They get about 8 and we get about 7. So you get out at that 16, 17% return, and the investor gets 8 and we get the other half.
And is there a management fee on top of that 7% that you get?
The target 8% return to the investor is after all fees.
I see. And is there any commissions to get into it?
No commissions. We try and make it as easy and fee-free as possible. The 8% target is the 8% that the investor gets.
Very good. Well, this has been very interesting. If you want to find out more, you can go to Paul's website, which is automationfinance.com. The name of the fund that he's offering is called the Automation Finance Reperformance Fund 4. Is that correct, Paul?
That's right. The other three are closed, and we'll have a fifth one coming soon.
Very good. Well, now you've learned all about how the investing in non-performing debt can maybe give you a relatively secure target 8% return. Thanks so much for being on the Money Answer Show, Paul.
Thank you so much for having me.
Thanks again. We'll be back after this.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest for this half hour is Cody Barbo. He is the founder and CEO of Trust and Will, which is a modern estate planning software startup. Welcome to the show, Cody.
Hey, Jordan, good to be here.
Just give us your brief history and how you got to where you are today and founding Trust and Will.
Yeah, so I've been in Southern California my whole life, so 30 years, and I've been in San Diego for the last 13. Came down here for school. I've been an entrepreneur for a decade now. It's my third business, my second venture-backed company, and not an attorney by trade. So how does a non-attorney get into an estate planning business? Well, I got married. I'm also now a father, and as I've kind of thought of increasing this kind of financial wellness package in my life with a financial advisor, CPA, life insurance, the fact that I couldn't set up an estate plan easily and affordably the same way that I would use a TurboTax really surprised me. And for my co-founders and most of our team being in our 30s, married, new parents, it's a good time in life to start thinking about this. And the fact that nobody was doing it best in class and most importantly affordable for the everyday family is really what inspired us to start this business. And we've just been on a rocket ship of success ever since.
So give us the kind of landscape today of how many people are out there who are dying without wills and healthcare powers of attorney and the basic estate planning documents.
Yeah, great question. It's really concerning. Half the adult population does not have an estate plan. And even many of the times, folks that do have an estate plan have a set of documents that are out of date. They set it up when their kids were born. It might be 5, 10, 15 years later. Do you know where the documents are located? Does your family know where the documents are located? So it's not just those who don't have an estate plan. Even those that do oftentimes need to update theirs and need to have that conversation with their family for the inevitable, which under the pandemic the last few months, we've seen our business spike in ways that we never could have predicted. And it's really brought the conversation to the forefront of the importance of an estate plan.
So of the roughly 100,000 people that have died for the coronavirus in the last few months, just roughly how many, is it more than half of those that do not have estate plans or wills?
Well, statistically, yes. So 50% of 50 plus, you go a little bit older into the boomer crowd, don't have an estate plan. And the documents that are oftentimes most important for them and their family, it's the living will. It's being able to give access to someone in your family or life, be able to make medical and financial decisions on your behalf. And since the people that are highest risk for the pandemic skew into that demographic, it's really concerning knowing that statistically half of them probably don't have an estate plan. Will either end up in probate or even worse, their families will end up suing each other for assets. And it's just, it's really sad sight to see.
So you talked about it a little bit, but specifically, what are some of the things that go wrong if somebody dies without a will, living will, healthcare power of attorney, the basic estate plans?
So probate, first and foremost. All right, so probate, so we're in California. So states like California, if you end up in probate, it's going to take, first and foremost, it's going to take up to a year or longer, up to 2 years even to get to probate. On top of that, the government is taking a cut on the total assets that are being transferred. So take $1 million of assets that are going to transfer over to be end up $30,000 or more that should be in the hands of families. And that's if you have a will. A will still has to be probated, or if you have a trust, the trust avoids probate. So if you die without an estate plan, dying intestate, it really can create a lot of confusion and emotional anxiety for families, because who is to tell who gets the house or who gets the life insurance policy, who gets the financial accounts? And if you don't have a good relationship with your siblings or with other loved ones that are likely to want those assets and to distribute them appropriately, attorneys get involved. And my in my own family and many of the family members of our team, we've seen the worst of it. And that was part of the cause of why we wanted to start this business, is to help people avoid probate, educate them on the importance of a trust, especially if they own a home and have a couple $100,000 in assets, knowing what the consequences can be in the worst case scenarios.
So there are other online legal places, Rocket Lawyer, I guess it's called LegalZoom and so on.
Yep.
Why should somebody do a will or estate through you instead of those other places?
Fantastic question. LegalZoom, they've been around for 20 years, and despite their success, they've raised hundreds of millions of dollars in private equity. They have built an off-the-shelf solution for all legal products and services. Their core customer is a small business owner typically. They are a very transactional model around their estate plan. You have to pay up front, and on top of that, you're oftentimes paying 2 to 3 times the cost of what is advertised before you can even experience the program, let alone get a complete set of documents. We set out to build the most comprehensive estate planning platform the world has ever seen. So you can go through the entire experience from trust and will without payment until the end. So you can take as much time as needed. We lead with our 5-star customer support. You can chat with our team via text. You can call and book a phone call with one of our concierge members. And in the state of California, we even have an attorney tier. So you can actually speak to a trust and estates attorney for California residents. And we'll bring that to more states since our existing product offering is live nationwide. So we lead with a design-first approach, beautifully designed product. We lead with our 5-star customer support, which, no offense to LegalZoom, they do not have. And on top of that, we're not just focused on the documents of the creation of them, but also the ongoing updates. So every year you can come back as life changes, you have more kids, you move states, you buy a new home. All of those updates are easy to update. You just make the change that's needed, not have to start from scratch again. And you're not paying the full purchase price. You're paying $12 a year. We store all the digital information safely, securely in the cloud. And we're going all in on the lifetime journey of a customer. So we're moving into estate management next year. We've started that with the addition of the attorney review in California. We'll bring that to more states. And we're also working with financial advisors now. We have a product that we built for financial advisors that we announced last month in partnership with Charles Schwab. And we're working with all advisors, both the big firms down to independents, in building additional layers of accountability to always have an up-to-date estate plan. And next year, we'll move more into taxes, move more into life insurance. And I'd say that's the biggest difference between us and the existing legacy online players, is that we're focused solely on the vertical of trust and estates and never having to leave our ecosystem to go and spend money, tens of thousands of dollars with an attorney over the course of your lifetime.
Give people an idea of how much it costs. You pay a certain amount per document, or is there an overall fee? How does the funding work?
Yeah, great question. So we've decided to bring our products to market at a price point that the everyday family can afford. So our wills, which is a will package, last will and testament, power of attorney, healthcare directive, starts at $89 for an individual, $159 for couples. And then our trust-based estate plan, which is a revocable living trust, which is what most attorneys will set up your typical family with, is $399 for an individual trust and $499 for a couple. And now in respect to the other attorney prices, you're typically going to get quoted for $3,000 to $5,000 for this. And we've streamlined and automated a lot of it with our technology. We have a best-in-class trust and estates attorney on staff who's helped us design this. We've raised over $8 million in venture capital that we've invested in our product, and we have a team working out here every single day in San Diego, California, that are oftentimes building these products as much for ourselves, since many of us are married with kids, as we are for the rest of the country. So we're incredibly proud of this success that we've had so far, and that's why over 100,000 families across the U.S. have trusted us so far.
And do you have different modules for different states that have different rules?
Yeah, so great question. So estate planning is state-specific. So all of our document sets are specific to the state that you live in and come with instructions on how to make them legally valid. So even though our product is online, it takes anywhere from 15 to 30 minutes to go from start to finish. Once you've paid, we do a complimentary print and ship of our documents. We put them in a beautifully binded packaging that we do all shipping and fulfillment in-house. We ship them out next day. They arrive to your doorstep within the week. And then they'll have instructions for signature, notary, and witnesses in the documents specific to your state.
Now, some would say, lawyers would probably say, there's no way that can be as good as if they met with me and we went over their situation in person. What would you say to lawyers, estate planning lawyers, who are feeling threatened by you?
I don't think they are. I think the clientele that most attorneys are targeting are higher net worth, so a couple million in assets and up. like I said, we've really built a product for the everyday family. There's 40 million people that trust TurboTax every year to do their tax filings online, and they could easily go to a CPA. So the CPAs are oftentimes working with a more affluent or an older demographic that is less tech-friendly. And I like to think that we've built a product that's for a new generation, and it's not for just the young. We see our age range from 18 to 92. And if you look at our 5-star reviews, people constantly comment on the quality of our product and documents. They compliment our customer success. And for a lot of attorneys, they can't take on clients that are under certain asset thresholds. So they should be telling them to go to Trustimall as the best online solution. And we're really proud that, so far we haven't had really a butting of heads with estate planning attorneys. I think a lot of them, especially the forward-thinking ones, are very respectful of our business and the mission that we're trying to serve.
Very good. We're going to take a break. This is Jordan Goodman of the Money Answer Show, and my guest this half hour, is Cody Barbo. He's the founder and CEO of Trust and Will, which helps people fill out their estate planning documents. You can find out more at their website, trustandwill.com. We'll be back after this.
You've been listening to the Money Answer Show with Jordan Goodman. If you have a question for Jordan or his guest, please call us now at 866-472-5790. That's 866-472-5790. Now back to Jordan.
Welcome back to the Money Answer Show. This is Jordan Goodman, your host. My guest this half hour is Cody Barbo. He is the founder and CEO of Trust and Will, which is a modern estate planning software startup. Their website, trustandwill.com. Welcome back to the show, Cody.
Thank you.
So we had a big change in the estate planning law and the Tax Cut Jobs Act at the end of 2017, which raised the exemption to a very high level. So most people are not going to have to pay estate taxes now because the exemption is so high. Why do people need to do this if they're not avoiding estate taxes?
Well, the problem, it might be a question better served for our in-house estate planning attorney, since he went to school and really spent a good majority of his career in the taxes. But did you mean the Secure Act?
No. I was talking about the Jobs Cut, the Tax Cut Act at the end of 2017. That's the one that raised the exemption dramatically on having to pay estate taxes.
Yeah, 11 and 22 million.
Right. So people say, well, I don't have close to that, so I don't have to pay estate taxes. So why do I need to do a will?
It's not about money. It's about your family. Majority of people that set up an estate plan, I put myself in this bucket. I'm a parent. It's because they have kids. You have people of wealth, people not of wealth. Children are the number one reason people set up an estate plan. And second to that would be the purchase of a large asset. And for most American families, that's the purchase of a home. So kids are the number one reason, and the number that we focus on at our team is that there's 45 million parents with minor children in this country that don't have any form of an estate plan. And we actually launched a product. It's called Guardian. It's $49, and it's really designed for that first-time parent. And it's a nomination of guardian form. And a lot of new parents will start there and very quickly realize that, this isn't so bad. We educate them along the way. They communicate with our team, and they end up upgrading to our will or our trust package.
So what happens if parents die and no guardian has been appointed?
The courts get to decide. And I would say some of the areas where people spend, especially parents with minor children, spend the most time in our product is deciding who the guardians and backup guardians would be, and also helping them understand that they can come back and change them over time. I'm very lucky that my parents, they're older, they're retired now, but they would serve as great guardians to my daughter. But in 10, 15 years, things may change, and I would want my younger brother to be that responsible person to take over and to, watch my daughter grow into a beautiful young woman who's capable of having success in life. And that's the thing, is we see people come back now that we've been in market, a product in market for 2 years, coming back and changing their guardians or changing decisions in the estate plan. So the way that you phrased the question, it's kids are number one choice. The second would be purchase of a large asset, which for most people is the home, to update the estate plan.
So how do you protect, again, what happens to a home if you don't have a will setting out what happens to it?
So I'll go back to California. I mean, you end up in probate. It's going to take up to a year or two for you to even get to probate, and your family is dealing with how to handle the asset. Do they sell it? Do they take it? Do they divide it evenly? Was one sibling taking care of mom or dad more than the other siblings prior to their death, and they feel that they're entitled to the whole home? So there's a variety of factors that can kick in, and really the focus should be is having an up-to-date estate plan, having the conversation with your family sooner rather than later to know what decisions need to be made and how to take action on divvying up assets and property, et cetera, because it can get really messy, and that's what we're trying to help people avoid.
So what kind of fights happen amongst families after somebody's died over assets, and how can having a proper will avoid those kind of fights?
Yeah, so it sets the estate plan sets intention. So most of the times, the biggest property or the biggest asset is the home, which creates a lot of friction because of whatever the home value is. But sometimes it's not monetary; it's a family heirloom. So a lot of people, like my grandfather had a family bowling pin that he had saved that when he scored a perfect game, there's no monetary value to that. You put that bowling pin at a garage sale, it might not even sell for $1, but to our family, it had a lot of importance to us. So it just depends on how assets are cataloged in the estate plan. So something as large as the home all the way down to a family heirloom. And oftentimes, if siblings have hopefully good relations, they divide everything evenly. That's how my brother and I would handle my parents' estate. It's how it's designated and outlined in their trust. But for families that don't have that luxury of having their parents having an estate plan in place, it creates a lot of friction. And those conversations, unfortunately, are happening after the death when emotions are high, and potentially a windfall of assets is in hand. And that's where we see the most friction today.
Another document you probably offer is a healthcare power of attorney. Tell people what that is and why that's important to have.
Yeah, super important. So this, in simplest form, is electing people who can make medical and financial decisions on your behalf or make and access medical and financial records. And as you can imagine, with the pandemic unfolding the last couple months, for our 50-plus demographic that was coming to Trust and Will, this was probably the biggest request of documents, is making sure that this is in place so that they and their family can make decisions if they need to. So it's specifying those preferences. The big one is DNR, do not resuscitate. So if you end up in the hospital and you're basically on life support, what decision do you want to have made for you? And are you giving that authority to a loved one, whether it be a spouse or a child? So these are very uncomfortable decisions you have to make, but have very dire consequences if the documents don't exist. So we try and help educate people on the severity of them and helping them get a complete estate plan all the way through HIP authorization and the living will.
So if somebody does not have a DNR, do not resuscitate, the doctor cannot, in effect, pull the plug? Is that what you're saying? Because nobody has the authority to make that decision?
Yeah, it's always situational. It depends if the healthcare institution has a religious basis behind it. I mean, my wife works in healthcare, and I know that this is something that comes up quite often internally for her team. And it usually is, it's at the call of the medical professional to decide, or it can end up in the public media. And then you have cases like, was it Terry Schiavo? I was a kid at the time. Terry Schiavo, if I recall correctly. Right. And it became a landfall of conversation for the American public to have around this.
So we have about 2 minutes left. Why don't you just kind of summarize what difference it would make in people's lives to have their estate planning documents done with Trust and Will as opposed to the 50% or so of people who have no estate planning documents?
You can control how your assets flow. We think of estate planning as the multi-generational transfer of wealth, and being able to decide who gets your assets from your home to your financial investment accounts, all the way through who looks after your kids, your pets, even down to your digital assets. What happens to your Facebook, your Gmail, your iCloud photos? Those digital assets have a value that's sometimes hard to communicate. And what do you want to have happen to them after you're no longer here? Versus the unfortunate reality for tens of millions of people that have dealt with this is you die without an estate plan, you die intestate, and the courts decide what happens to your assets, or you get attorneys involved and families suing each other. It really can create a huge mess. So our whole mission at Trust and Will is to help families, the everyday American family, protect their legacy, and we do that by making our product easy, approachable, and affordable. So that's why we do what we do every day.
It's probably more timely than ever with the coronavirus now, because a lot of people are dying that didn't think they would ever happen, and without papers, it's going to be an emotional mess as well as a financial mess for the survivors.
Totally, yeah. We've seen a huge surge in traffic to our site, a surge in registrations over the last couple months. So registration meaning somebody who signs up with email and password and starting this process. And we put out, if you go to trustandwill.com, we put out a coronavirus resource page that helps educate people on some of the decisions that they have to make. So one of the big ones is sensitivity of just being high risk, but also the reality that we've been on lockdown. I mean, it's starting to lift a little bit, but for at least April and most of May, being on a lockdown, how do you execute the documents and notarize them safely with social distancing in mind?
Very good. Well, thanks so much. My guest this half hour has been Cody Barbo. He's the founder and CEO of Trust and Will, which helps you fill out all your estate planning documents. You can find out more at his website, trustandwill.com. Thanks so much for being on the Money Answer Show, Cody.
Thank you, Jordan.
Thanks so much, and we'll be back next week with another edition of the Money Answer Show. Goodbye for now.
Thank you for joining Jordan Goodman and the Money Answer Show. If you have a question for Jordan, please visit his website at www.moneyanswers.com. And be sure to tune in every Monday at 12 p.m. Pacific Standard Time right here on Voice America Business. See you next week.